You saw the headlines. Palantir hitting a new all-time high. Red Cat surging on massive volume. And as we head into earnings week, you're probably thinking one of two things. I missed it, or is it too late to chase it? But that's the wrong question. And asking the wrong question is the most expensive mistake an investor can make. The real mistake isn't missing a single stock pop. It's failing to see the multi-trillion-dollar military upgrade cycle that's driving all of this. Look, if you're short on time, here's the key takeaway. The nature of warfare has fundamentally changed, and the market is aware of it for a while, but still has a long way to catch up. It's no longer just about who has the biggest missiles. It's about who has the best data, the fastest deployment, and the smartest network. The companies building this digital backbone are seeing massive real government contracts that justify these moves. Today we're going to break down which ones have real strategic moats and which might just be riding the wave. So yeah, my name is DataCat. For a long time my job was to sit in a cubicle at a Fortune 50 company and basically live inside spreadsheets and data models, the corporate grind. I guess I traded that life for this. A camera, a keyboard, and a lot less corporate jargon. I'm not some Wall Street guru. Honestly, I'm an introvert who's definitely camera shy. I just like digging into the data, connecting the dots, and figuring out the why. It feels more valuable than most of the PowerPoints I used to make. So let's do that. Let's dig in. The current geopolitical landscape, especially with tensions in the Middle East, has put a spotlight on defense. But the money isn't just flowing to the usual suspects. It's flowing into the technology that forms the nervous system of a modern military. Let's start with a name you've probably heard a lot about, Palantir, ticker PLTR. Palantir isn't a traditional defense contractor. They don't build jets, they build the digital brain that connects everything. Their main platform, Gotham, takes all the chaotic information of a battlefield, drone feeds, satellite images, intelligence reports, and fuses it into one clear picture. For a commander, this is the difference between guessing and knowing. And this isn't theoretical. The demand is real. They recently got a contract expansion for Project Maven, the Pentagon's main AI program, worth around $800 million. This isn't just a renewal, it's the Pentagon making Palantir's AI the core of its battlefield analysis strategy. This directly affects the company's revenue for years to come, creating a stable foundation for its growth. Now let's look at the chart. The stock is trading around $149, which is significantly above all the moving averages. The wide gap between these averages tells you this isn't a fluke, it's a sustained long-term bullish trend. There's a robust buying volume behind the move. The RSI is at 65 healthy, but not in the extreme danger zone yet. And here's a key detail. While the market conditions could always lead to minor corrections, there are no major bearish divergences, where the stock price makes a new high, but the momentum indicator doesn't. The absence of that divergence means the upward trajectory is still technically supported. The chart is essentially confirming the story the contracts are telling. From the all-seeing brain, let's zoom into the eyes on the ground. If Palantir is the strategic brain, Red Cat, ticker RCAT, provides the tactical eyes. This is a high-growth, small-cap company that is a pure play on the drone revolution. The conflicts in Ukraine and the Middle East have proven that small, agile, and cost-effective drones, what the military calls SUAS, or Small Unmanned Aerial Systems, are now a fundamental part of battlefield dominance. Red Cat's flagship drone, the Teal 2, is specifically designed for this first-person view intelligence gathering, especially in low-light and nighttime conditions. This is a critical capability gap the Pentagon has been rushing to fill. This isn't about large, expensive Predator drones. It's about equipping every single squad with its own eyes in the sky. And here is what Wall Street doesn't want retail investors to know about these smaller defense companies. The moat. In an era of heightened supply chain security, especially around Chinese-made drone tech from companies like DJI, the Department of Defense created the Blue UAS list. This is an exclusive shortlist of approved secure drone manufacturers. Red Cat's subsidiary Teal Drones is on this list. This certification effectively greenlights them for purchase by the DoD and other federal agencies, transforming them from just another drone company into a trusted government partner. This is why you saw the stock surge over 20% on Monday. The market is rapidly waking up to this niche leader. Technically, the breakout to over $10 is powerful, sitting well above its short-term moving averages. However, you have to be careful. The momentum indicator numbers place the stock in precariously overbought territory. Now, in a high-growth momentum-based stock, that's not unusual, but it warrants caution. It's like a cat that's just chased a laser pointer all over the room. It's full of energy, but it's probably going to need to lie down for a bit. You'd want to watch for any signs of weakness that could signal a brief consolidation, even if the long-term story remains strong. From the ground, let's go to orbit. Next up is Rocket Lab, ticker RKLB. In a conflict, the ability to rapidly deploy or replace satellite assets for intelligence and surveillance is a massive strategic advantage. This is called responsive space, and Rocket Lab is rapidly becoming the premier provider. If a critical spy satellite is disabled, you can't wait months for a traditional launch. Rocket Lab's Electron rocket is purpose-built for this mission, offering speed and flexibility from launch pads in both the US and New Zealand. But here's the deeper story. They are not just a space taxi service. Through a series of smart acquisitions, they now manufacture critical satellite components themselves: solar panels, software, reaction wheels. This vertical integration means they can offer a one-stop shop solution from component to launch. This is incredibly attractive to defense clients, simplifying procurement and positioning Rocket Lab as a miniature, more agile version of a giant like Northrop Grumman for the small satellite era. The market's confidence is clear, with the stock pushing to new highs around $43. But that explosive momentum comes with a major caution flag. Rocket Lab's technical indicators are the most stretched of the four companies we're looking at. This is a double-edged sword. It signals exceptional buying strength, but it also dramatically increases the risk of a short-term pullback. For a company this hot, you have to watch for any drop in volume or divergence in momentum that might hint at a temporary cooling off period. Finally, let's talk about the company that holds all of this together. So you have Palantir Software, Red Cat's drones, and Rocket Lab satellites. How do they all talk to each other securely and reliably on the battlefield? That's L3Harris, ticker LHX. They are a premier defense technology prime, and their unique strength is providing the C5ISR systems. That's command, control, communications, computers, cyber, intelligence, surveillance, and reconnaissance. They are the glue. They build the resilient tactical radios, the secure data links, and the integrated network systems that allow every soldier, vehicle, and command center to share information in real time. Beyond communications, they dominate the invisible domains of modern conflict: electronic warfare, space superiority, and undersea systems. They make the jammers that disable enemy drones and the acoustic sensors that track submarines. This is a field where they have decades of experience and deep integration with the Pentagon, creating an almost impenetrable competitive moat. In contrast to the high growth potential of the others, L3Harris offers stability. It's a profitable, established prime with a massive backlog of multi-year government contracts. For an investor, it represents a lower risk way to gain exposure to this entire theme, a steady anchor in a portfolio. Looking at the chart, LHX is trading at 262 again, solidly above its moving averages, reinforcing its role as a market stalwart. Momentum indicators show it's also experiencing strong buying interest, pushing it into overbought territory. But for a high-caliber prime like L3Harris, this can be interpreted differently. It's a condition driven by strong fiscal backing and investor confidence. It suggests that any temporary pullback is less a sign of a major reversal and more of a potential opportunity for accumulation by long-term investors. It's the old, wise cat of the group. It might not be doing crazy acrobatics, but it's dependable and knows its territory better than anyone. So, as we head into earnings, the story isn't just that defense stocks are up. The story is the fundamental shift from industrial-age warfare to information-age warfare. It's about software, networks, and speed. The breakouts you're seeing are built on real multi-billion-dollar government initiatives. But each company carries its own technical risk. The high flyers like Rocket Lab and Red Cat look stretched and could pull back, while the more established players like Palantir and L3 Harris show strong but less extreme momentum. Look, I'm just laying out the data as I see it. It's your capital, your decision. If you found this breakdown useful, maybe stick around. I'll be here, digging through the numbers. It's what I do. Alright, I think my own cat is demanding a data analysis of his food bowl, and the data suggests it's critically empty. So I should probably go. Stay sharp out there.